Hello, everyone, and welcome to today's major markets update. Blood on the street continues. This is not a fun market to be in unless you're looking to the downside. Otherwise, cash is king. Cash is a position too, so to say. Let's see what we have. Looks like a fifth wave extension, but still method to the madness. Remember, I was tracking a fifth wave lower, and we are also on the lookout for this potentially being a larger fifth wave lower of our C wave. Those two, that option remains on the table, and the semiconductors has already confirmed it by breaking below the February 24th low. That was the line in the sand for the bulls versus the bears. So let's go over some indexes. Okay, the first one is the futures market. The futures market is this kind of dog wags tail, tail wags dog type of market versus the S&P cash. I always say cash is king, but we know futures markets can drive the cash market quite a lot in their opening primarily, because a lot of shenanigans can go on overnight, especially if bad news or good news hits the wire before the cash market opens. So here is, I know this is a busy chart, a zoomed out chart of the futures market since the top here in early January. And look what we have. So here we have two options that we either are impulsing lower as a C wave of a wave 4, or we are simply ABCing lower of a wave 4. Now I want you to pay special attention to some of these larger Fibonacci patterns of Fibonacci extensions. So if we have a regular impulse, then you can see that a extended wave 5 here in blue ideally targets between 4061 and 4100. This is what I meant with, if we go below the February lows, we should most likely see the high 4000s. Now, if we then gonna zoom in a little bit more and look at the decline that we've had since the early February high, this potential wave 4, we have a 1, a 2, 3, 4, 5, or we have wave 4 just complete in overlapping fashion. And then you can see the 178.6 to about 2%, 200% targets the same level. So this is why I continue to have these two options on the table. So nothing has changed, these two options. These are the doors the market can go through. Now the upside since the February 24 low looks impulsive. Okay, it does, but it can be a B, and a C. And that's it. And I'll show you in a minute how the A, B, and C would then align. And now we're in this gray wave 5. So nothing has changed my perspective. My preferred view is that we already completed wave 4. Well, that was definitely not the case for the semiconductors. So I was wrong on that one. And that is simply the way things sometimes go, where we prefer something based on the impulsive looking pattern to the upside, and it gets nullified, unfortunately. But let's have a look here what other people are thinking as well. So this is from Avi Gilbert from ElliottWaveTrader.net, and he is looking for a C wave down to 4170, 4250. Okay, so we are now at around 4200. So nothing out of the ordinary just yet for a potential wave 2, which I have as green wave 2B, if you remember. Alternatively, as he said, we have wave 4 down here to about 4079, 4056. Okay, so that fits pretty well with what I'm looking for. Okay, so that option also remains on the table. If anything, Avi is definitely one of the best Elliott wavers out there that I highly value his insights from. Again, nobody's infallible, so we can all be wrong. And here as well, he's looking for an alternative for somewhere between 4000 and 4100. Okay, so we're well aligned. That's great. I think we're seeing the same thing, right? You always want to get a second opinion. Now let's move on to the S&P 500. So we have our alternative 3, alternative 4, alternative 5. Okay. That is still possible. As I showed you, that was, of course, the possibility for the Dow Jones. And that is, of course, then a possibility for all the other indexes. As I showed you for the semiconductors as well, that we would be in this diagonal. Let's see, something got a little bit messed up here. There, this is the green. Well, that one is of course now confirmed, green 4, right? This is some diagonal wave lower. So that remains still the option. So no surprises still. So the S&P 500 bottomed on Friday, right at this orange 161.8% extension. All right, picture perfect. So this was preferably the B wave high, 1, 2, and we should be impulsing higher. Then you can see we topped right, picture perfect, into the wave 4 target zone. Picture perfect. 2 out of 3 so far. Now then, wave 5 should ideally bottom here. Okay, this is the ideal Fibonacci-based impulse pattern to either the upside or the downside. But as you know, the market doesn't owe us anything, it doesn't have to listen to it, and we broke well below it. So what we have on our hands is now a extended fifth wave lower. Okay, now wave 1 and 3 were very simple. They didn't subdivide 1, 2, 3, 4, 5, but they didn't subdivide on the hourly time frame. So it looks like the market now decides to subdivide on the hourly time frame. Okay, so remember we have our light or thinly shaded target box for where typically 90% of all the 2/B waves bottom, anywhere between 23.6 and 76.4. Once a wave 2/B gets underway, you don't know where it's going to bottom. You need a lot more price information. Okay, just because it has this large target zone doesn't mean it will have to bottom in either of it, but most of the price action. And then the ideal one is here between 38.2 and 61.8. That is just ideal textbook, what we like to see. Then here in gray is where ideally, if this is a expanded irregular flat or irregular expanded flat, should have bottomed here. Well, that's not the case. The C wave is extending. Okay, the C wave is unfortunately extending and can go as low as 41.30. Yes, it can go this low. This is then the extended ideal target zone. Well, I'm still missing a wave 3, a 4, and a 5 in blue. Okay, so again, this is where perfect, not perfect. 70% reliable. This method is not perfect either. The market doesn't have to follow this, but it's quite amazing that you can get this one right, and then the market does this. Why? Honestly, otherwise it gets too easy. It gets too easy for me, it gets too easy for everybody because we nail it every single time. And that's not the case. Clearly not. Clearly here, picture perfect. Clearly here, picture perfect. Not perfect. 2 out of 3. And honestly, that's why I say I'm 70% reliable. This is where it ends. This is a extended wave 5. Extensions of any wave can always happen. They tend to happen in third waves, but not necessarily. And they are known to happen. You just don't know if they're going to happen or not. And in this case, it certainly didn't happen. And we're bleeding lower. Unfortunately, with, of course, the alternative, as I showed you before, we're going to go into the 4,000s. It's still very, very possible. Okay. Here is some work from Pretzel. Pretzel introduced me to Elliott wave, more than 10, 12 years ago. And here we have also the same two options, that we have a wave 4, and then here on the right hand corner wave 5, which is in about 4,000s, or we have the 1, 2, 3 setup. Same deal. Okay, he's seeing the same thing. Trust me, he's not shopping around. I know this guy says I'm not shopping around because looking at other people only confuses my own work. So this still fits very well with the wave count I'm seeing. How are we then doing for the NASDAQ? Same here for the NASDAQ. Wave 3 here in orange, bottomed right at the 161.8. Wave 4 right to the 100%. Then wave 5 ideally goes here. Looked very close here, somewhere intraday, but it's not. It looks like we have a subdividing wave 5 of C of 2B on our hands. Alternatively, as I showed you, this is all of wave, a larger wave 5 of wave 4, so to say. So we haven't even had a hourly candle here that says we have 4 and we have 5. Again, the retraces bottom 90% of the time between the 23.6 and 76.4%. Right? It is impossible to know beforehand where exactly it will bottom. You Don't know. So we kind of just go by, okay, this should be the average. Most retraces are somewhere around there. We simply have to have more price information available, okay? Again, here the market followed the ideal fib-based wave pattern. Wave 3, wave 4, perfect. It stopped deciding to do it. It had the chance to actually say, I'm complete, but it decided not to, based on price information or information that became available to the market. And subdivisions, as I said, can always happen. We can anticipate them, right? But we don't know if they're going to happen. You don't know it before. So you get 2 out of 3 correct, and that's just as far as it goes. And that shows you what we need to always do is anticipate, we monitor, and we adjust. Okay, so we anticipate the 200% based on the fact that we've got the 300 or the 161.8%, the 100%, and then the market decides to do something else. You monitor for it and you adjust accordingly. This is the beauty of Elliott wave, and you can still see there's method to the madness. Okay, there really is method to the madness. We unfortunately got a extended wave 5 on our hands. Similarly, Dow Jones bottomed right here where wave 3 should bottom. Wave 4 topped where it should have bottomed, and now wave 5 is subdividing. Also here, I'm not seeing yet a hourly candle that gives me confidence that this downtrend is over. Please remember the alternative count 3, 4, and 5. Okay, similarly to what Pretzel sees, similarly to what we have here from Gilbert's, okay, or from Avi Gilbert from Elliott Wave Trader. So nothing yet. There we go. Okay, it's the end of the world. Forget about it. It's never ever going to get any better. So if this is a irregular expanded flat, then the C wave can go as low, ideally, as about 32,600. Okay, we're not there yet, but we're already in this typical C wave target zone. So nothing out of the ordinary for the Dow Jones yet. Okay. I don't have a 3. I don't have indication of a 3, a 4, and a 5 that's in. 3 perfect, 4 perfect, 5 should have bottomed here, not perfect. That's what we're going to wait for. This is probably going to go a little bit lower, but you get the idea. Now let's look at the NASDAQ. Same here for the NASDAQ. Same story. Picture perfect target wave, target zone reached for wave 3. Picture perfect target zone reached for wave 4. And here we could have had already wave 5, so to say, but it didn't. It subdivided lower. Orange 5 should ideally have bottomed here. Nope, the market said it's not going to happen. I'm going to throw the curveball. I already mentioned on Friday, we're probably going to get the curveball. And this is where the curveball is. So I don't have a 3 anywhere yet, and I don't have a 4 or a 5 yet. And again, if we go below the February 24 lows, then we simply have a extension on our hands that is going to look like this. Then we have major 3 here in December of last year. Wave A, wave B, and then wave 1, wave 2, wave 3, wave 4. I can even count it a slightly different. But from this wave 4 high here, 1, 2, 1, 2, 3, 4, 3, 4, and now subdividing lower for this 5 of 5 of 5 of C. Okay, so that's what we're looking at. So this is then how I would change this B wave high into a wave 4 high. A was 5 waves higher. Remember, I said I spy with my little eye 5 waves higher. So 5 waves higher can indeed be the initiation of a new bull market. And then we had 3 waves lower, and this could count as 5 waves higher as well. And then we make that a wave C, and then we adjust it accordingly. So this is how I can form fit the wave 4 high, as I showed you for the Dow Jones. That was the alternative count. And the other semiconductors, that was the alternative count. That would have been applied to all indexes, of course. So this is then how we're going to check it out, if that's going to happen. Anticipate, monitor, adjust. So this is the semiconductors. Let's start off with what we originally had. Okay, semiconductors did something else. I was looking here also for an expanded flat based on what the other indexes were doing. I counted it as 5 waves up, 3 waves down, etc. Unfortunately, that was wrong. Again, I'm not infallible. I sometimes can be wrong. That's why I say 70% of the time reliable, just as I showed you for the Fibonacci patterns. I cannot be exactly right. It's impossible. You cannot ask for perfection, right? It's unfortunate. So I have to adjust the wave count, and that was wave 4, which I already showed you as the alternative. So that remains the same. I just have to form fit this wave 4 into the hourly chart. How can that then be achieved? It can be achieved this way. This way I can achieve it. 1, 2, 3, 4. And we should now be in 5 of gray 3, a 4, and a 5. So that would look something like this on the daily time frame. 3, 4, and then of course this wave 5 is going to go lower. Please remember that wave 3 here was not achieved to the ideal target zone, so we still can reach this target zone here. This remains on the map. That has not changed. We can go this low for the semis. Again, then we have retraced all of major 5 that started here in May last year, alternatively March last year. It's fine, most likely May. So it's very, very possible that we're going to retrace all of this major 5, and this market is not going to be done until then. So this was the alternative count. That is now the preferred count, and we should be subdividing lower. So nothing out of the ordinary, and yes, we can go to the 2800s. Let's have a look if we can get there. So we anticipate, we monitor, and we adjust. The markets will throw curveballs when everything still looks great for an ideal wave 5 with a 200% extension. The market says, no thank you, not going to happen. We're going to do something else. IWM, same story. We have wave 1 here in orange, wave 2 here in orange, 3, you see here, bottom right at 138.2, wave 4, 76.4. Then ideally, textbook wave 5 should bottom at 176. Okay, for a 5-is-1 relationship. No, thank you, the market says. I'm going to do something else. Now, why? It's all the information becomes very. Wave 3 wasn't that long. It was only 138.2. If that happens, most of the time, wave 5 is going to get extended because wave 3 is just not as long as it should. It should reach 161.8. Even that is not a guarantee. Again, we're still in the 90% interval of where waves 2/B should bottom. Anywhere between 23.6 and 38 and 76.4. So that meant that on last Tuesday, this could indeed have already completed all of wave 2/B in green. That's why I said if we break below it, then we're going to head lower, and we followed this standard impulse pattern. 3 was standard, 4 was standard, 5 is not standard. That's unfortunate, and that's unfortunate the market we have to deal with of course the notion we can still go below the February 24 low. That remains still possible. So we always have to keep an open mind. We always anticipate, we monitor, we adjust. We start off with the ideal Fibonacci-based impulse pattern, either to the upside or the downside. And then we'll see how the market will comply to those Fibonacci levels. Doesn't owe us anything. But when things go really well, you then of course expect to see this wave 5 reach it as well. It did it, but it's extending, unfortunately. It's very unfortunate. I don't control the markets. You don't control the markets. The markets do what they have to do, but there's still, as you can see, a nice method to the madness. We have an extended 5th wave on our hands. So the extended 5th waves are always anticipated. We cannot know them beforehand. As I wrote on Friday and last week, wave 1A is complete as long as the 24 low holds. And wave 2/B can also be considered complete as an irregular flat. Well, it wasn't complete. I was wrong on that one, as we indeed had a wave 5 of wave C of 2B still underway and subdividing into an irregular expanded flat. But please remember, we still need to hold these lows. If not, then all we had was a, as I showed you for the Nasdaq, ABC up, 535 pattern with a very brief short C wave. C waves don't have to be equal to the length of A. They can be any length of wave A. Semiconductors retrace the most, I wrote on Friday, and can still try for a lower low as an diagonal wave 5. Well, that was correct because the index did move below the February 24 low. It can be a precursor to what's going to happen to the other indexes. So far, it stalled at around 161.8 for potential wave 3 of 5. Okay, So I still expect further subdivision. I still expect further downside. Now, I didn't show it in much detail, but the futures market remains ugly and overlapping to the downside. It could be some sort of diagonal. It just looks all ugly. Actually, let's just go and check it out real quick. Okay, let's zoom in to the futures market. I hope, yeah, there we go. Oh. It just looks very ugly, the short term, the futures market. So zooming in here, wave 1 is preferred, as I showed you. It can also be a wave 4. This price section here looks just all ugly. I had it originally as a diagonal. Could be 1, 2, 3, 4, 5. Again here, 41.60 is not out of the ordinary for a potential wave 2. That'd be a 78.6% retrace, as well as what Avi Gilbert is looking for as a potential low. But this doesn't look like an impulse to me unless I'm missing something entirely. I don't know. It just looks ugly, very overlapping. Look pretty good here at the open, and then this could be a fifth wave. So we'll have to monitor it accordingly and diligently. But it kind of looks sloppy to the upside as well. Not super clean, but okay. And definitely not so clean to the downside. So this is as tough can get. I wish it was clearer, but those are unfortunately the markets we have to deal with. So the NASDAQ 100, the S&P 500 are experiencing this extended subdividing fifth wave lower. All right. We, or the market, nailed the third and the fourth wave targets, right? 161.8, 76.4, picture perfect. But then wave 5 is throwing the usual curveball. Remember, any method is probably about 70% reliable. You get 2 out of 3, and then the market does something else. As I said, I think I already mentioned that on Friday. If it really sucks, I really don't like it. I really would like things to be picture perfect, but you can see how the market can throw this curveball. The indexes can still break below the February low. That alternate option has already been shown by the semiconductors, was already shown on the semiconductors, the Dow Jones chart. And of course, it's applicable to all the other indexes. Now I've shown you that for the NASDAQ 100 as well. We do now require a breakout above the 1A high to better identify the 3, 4, and 5. I did it already last Wednesday, and of course those upside targets are now reduced because we're making lower lows, and the semiconductors is not even close to setting up a new first wave higher. So with that, thank you so much for listening. I hope you appreciate how we anticipate, or how I anticipate, how I monitor, how I adjust, how things are going really well, and then the market does something else. Again, I don't make the markets, we track them, and then when the market does something else, then anticipate, we monitor, and we adjust accordingly. And that's the only way to go about. There is no other way. I am aware that we can get an extended fifth wave, but we don't know it's going to happen until we actually see it happen. And you can see it happen in real time, and that is actually amazing, that there is indeed a method to the madness. And let's see how we're going to progress over the next several days if we do indeed go below the February 24 low. Again, I'm still looking for a larger fifth wave higher in the bigger picture, but on Wednesday I will show you, in case you're very concerned that we've already topped for the super cycle 3 top, how that would look like and what we can expect. Okay, I'm not going to be completely ignorant of that fact, and I know some of you have asked for it. So on Wednesday I will not review this short-term hourly charts. We'll just let them fill themselves in, and I'll review if we have topped for super cycle 3, how we're then going to move forward in time. Okay, again, that's not my preferred view, but we got to keep an open mind also for that. We keep an open mind for the short term, we keep an open mind for the intermediate term, and we keep an open mind for the long term. With that, I was able to forecast pretty much well where the highs and the lows would be last week, and now we get that proverbial curveball. It's very unfortunate in that sense. I wish I could nail it every single time, but then the market would have no surprises and be untradeable because we'll always be on the right side of the trade. But I think we got a pretty good last week, so let's see what we're going to have this week. Completion of these smaller fourth and fifth waves be ideal, and then let's see if we can get the start of a more serious trend higher. So with that, thank you so much for listening. Take care, trade safe, and I'll see you all on Wednesday. Bye.